I asked you all on YouTube recently what kind of stuff you want me to make. I've made tons of automated trading content, just focusing on all trading and other platforms. I've talked about other coins in the past, but I wanted to ask you, what do you like? What do you want to see more of? And you guys really like the market outlook. You guys really like the 5-minute market updates, which is great. I'm really thankful for that. But I also see that there's about 24% of you that are really into trading strategies, which is good because that's what I'm about. Like it's the whole better traders thing that's literally above my head. So in today's video, I want to give you a challenge. Now, not all of you are accomplished traders yet. Some of you still make mistakes. Right there, I mean, I bought Ethereum. I think if you bought Ethereum, it disqualifies yourself from being a better trader. But seriously, what I want you to understand, though, is that there are still ways for you to exit out of an unprofitable trade with patience and careful DCA. I say this a lot in the Better Traders Club Discord server. I say this a lot in the posts and the other videos that I share everywhere on all the socials, whatever. And I want to use Fartcoin as an example. Now, the only reason why I'm sharing Fartcoin is because this one had a meteoric rise. It was insane, really, from here, October, all the way up to its high in January. It shot up 13,752%. Now, here's the thing that I like the most about this chart. Day to day, this chart saw incredible swings. I don't even want to talk about the uptrend. I want to talk about everything from the downtrend because this is the market that you're going to have to get the most comfortable trading in. This is the type of market from the all-time high down here to this newest low, down 92%. This is the kind of market that I started trading crypto in. It was back in December 2017 when I joined crypto, when I deposited my funds, bought some Ethereum, and made good money, lost a lot of money. Then I tried to figure out, okay, what am I doing? This market is unlike anything I've ever seen before, crazy volatile. What are these swings? What is all this stuff? I'm going to share with you a couple of nuggets of wisdom on how to trade a market like this, especially that's in a massive downtrend, so you're not just left holding the bag. The first thing I want you to know, and this is going to go against what a lot of you believe about crypto, trading is work. Now, I know that we have the courses and Better Traders. I know I talk about automated trading. I put in a lot of time to all the signals, all the strategies, all the techniques, even the course materials. So it's going to be work. It feels work for me to create it. It's going to be work for you to implement it. But the idea, the ethos behind the 15 Minutes to Financial Freedom course is reducing the time in front of your screen to just 15 minutes a day, which I think is 100% possible. Now, this next thing I want you to understand about trading in that it is work, but trading is also fun. I know this doesn't look like a whole lot of fun, but what I mean by fun is that it's going to be work, but you're going to have fun doing the work. That's why I'm still in the crypto markets now for 8 years, which is insane. But the reason why I keep coming back to crypto time and time again, bull and bear market, is because it's fun. It's fun because I've learned how to use and leverage DCA, not use leverage with DCA, but to leverage to my benefit DCA strategy so that I can walk away from the majority of my trades and profit. Now, the next thing I want you to understand right here is that, chop is for practice. What I mean by that is chop meaning that when markets are just chopping sideways, this is a great time for you to practice trading. And if you're not comfortable risking your own money, or let's be honest, you've already exhausted all of your reserves, you have no dry powder left, you can use paper trading on AllTrading, which I highly recommend using, especially for what we're going to be talking about in today's video. So if you can accept and understand that trading is work, trading is fun, and chop is for practice, this completely changes the way that you're going to be approaching trading. Because let's be honest, a lot of you are thinking of investing as instant money every single time, instant gratification. You're thinking about this scenario, successively green candles over and over, making a 17x on every single position. A lot of you are disillusioned. That's not normal in crypto. A lot of you think that investing is really, really stressful. When in reality, I actually think trading is fun. Investing, oh yeah, investing can be really stressful. It depends on your outlook. It also depends on your portfolio. But for the most part, trading is actually really fun. Investing means that you're buying and holding. You're looking for good support. Okay, great. I got support here. And now the price is going against me and I'm down 36% from my entry on this chart. Oh man, this is not fun. No, investing cannot be fun in crypto unless you're buying the Pico bottom and selling the Pico top every single time, which people rarely do. The third thing, a lot of people get exhausted from chop and they decided to chop up their charts. They decide to chop up all their plans. They decide to chop away their portfolio. The reality is that market movements like this, especially with a forgiving chart like Fartcoin, this is a great chart for practicing on. Not every single chart is going to be this whippy, and this is the big reason why I'm using this chart. So let's get into it. If you're going to be trading, the daily time frame is going to be a bit too slow, but it depends on the chart, okay? For instance, Fartcoin, it's not unusual for this chart to pump 39% in a day, which is stupid. 19%, 11%, being down 13% in a day, 23% in a day. This move right here, down to here, is 44% over 3 days. Is painful. It's painful, but chop is for practice. So let's go down one more layer. If you're going to be trading a chart like this, the daily time frame isn't going to be where you want to be. You're going to want to be on a faster time frame. Now, how fast is too fast? Well, I think the 1 second time frame, it's a bit too fast. 1 minute time frame, too fast. 10, too fast. Let's actually scale it back up to about the 4-hour time frame. The 4-hour time frame is a really, really good time frame to use because you can get the gist. You can get the scope of the move. You can see the trend. Like, you don't need to draw a lot of lines on this. You can just kind of see it. Now, of course, if you want to trade on faster time frames like the 60-minute, the hourly time frame, it's also a really good time frame as well. It's going to depend though. Not every chart can use the same time frames, but the majority of my charting is done on the daily and the 4-hour time frame. Now, trading a chart like Fartcoin, another thing that's really important is that depending on your time frame, you're going to see what the potential profit is. So here on the hourly time frame, this is like a 3% candle. I'm looking at the close, by the way, and the percentage right there. Like this candle right here, 10%, which is huge for an hour. That's insane. Like here, from the 22nd of January, from 4 a.m. to 4 a.m., it round trips. But it also falls down during that period 20%, which is crazy, which is absolutely crazy. The fact that it falls down 20% only to bring it, or rather get it all back again, is insane. Okay? The time frame typically will tell you how much you can make. So pay attention. So if you're on the 5-minute time frame, like let's go to our current price action, okay? So we're seeing it move up like what's 0.64% now, or like one candle is 1.63%. You can trade a faster time frame like this, but be prepared to accept smaller gains. Understand that you're going to miss some of these bigger moves, like a 20% move that happens in 2 hours. It's silly, guys. So the time frame determines your profit potential, but so does the chart. Let's go back to the 4-hour time frame, okay? Now, I want to help you out right here. The one thing that will benefit you the most with a chart like this is just using your eyes and paying attention to the lines. When it starts out, it's really difficult to gauge how low it's going to go, but we can use support and resistance levels to find good areas. And if those areas are lost, then we want to zoom out again. Where are other levels that we should expect the price to bounce off of, okay? Using support and resistance ranges or levels is a really great way to help you identify where real panic levels could be if things get real bad. Now, we're going to go back to where the price was. Here's that first support level that we talked about right there, or I drew, okay? So we saw the price break it. Whenever you see a price like this break dramatically, a level of support that you draw, or we could even say this one, it gets broken as well. This is scary. If it breaks like this, expect it to keep breaking more and more and more. Okay? But what you can do, and this is something that I teach in the 15 minutes course and also in the account builders course, is channel trading. So when the price breaks and it makes a support level, expect it to go down. Don't look to get an entry right here because it's broken this support level. Look for the next level and just ping pong. That's a 51% move in 4 days. So if you want to have more activity, you're going to have to zoom in, which means you're going to have way more of these white lines all over the place, which means that you're going to have these tighter ranges to trade within. Okay? That's one way to do this. But this style of trading is going to take a lot longer. You're going to have conviction to hold and to wait. And you also need to understand that seeing a 64% increase in 6 days is insane, but this is a chart that's really generous. It's really, really, really whippy. Another thing you could do that's similar to that is to use the parallel channel tool. So if we go over to our channels, lines, trends, all that stuff, there's a parallel channel. It doesn't have to be perfect. You do something like this, and you can do something like this. Great, perfect. And it's going to break out of it because it's crypto. It's going to be super volatile. But trading in a downtrend like this is completely possible. You want to look at essentially the middle of this range. And instead of trading the exact outside from here to here, you want to be focusing more on this mid range, making a little move like this of 24%. When it goes below that range, actually, let me show you a little secret right here. You can add an extra inner line right here. So there's the outside lines. So we're going to add a 25% and a 75% line. We're going to make the 25% line, oh, it's inverted. That's okay. We're just going to flip it. This is going to help us to find and identify that range that we can trade inside of. Now, this looks easy. It ain't easy, guys. Trust me. Many, many, many bear markets of experience. It's not easy, but it's fun. Because when you finally get that entry and you can sell for that little profit, it makes it all worthwhile. Again, right there. Sometimes, though, you don't hit that range. The important thing that you have to understand about really significant downtrends like this is that it's okay to be greedy, because if you are looking at something like this instead, where it's up, so that's how they do it? Weird. There we go. You want to be a little bit on the greedier side. You don't want to be looking for the exact outside of these entries. So just entering here, even selling it back to the middle, taking half out as soon as it pops back, it's 11%. Buying some here, taking out some more, 13%. It actually goes up 24. That's insane. In a 4-hour period, having it go up 21% is stupid. It literally does not, that should not make sense, guys. But again, this is crypto. But can you see how well this works? Now, the reality is that eventually charts will break out of this. So what do we do when it breaks out? We have to readjust. So we're going to go back to the same parallel channel tool. Actually, we'll leave that other one back in to give us some frame of reference. Oh, I know I had it favorited. Great. Oops. Nope. I just was, sorry. Okay. So we got this guy. Let's just take it like this to this. Okay. So we're going to say this is our channel now. Let's get rid of the other one. Sometimes it's going to break below, and it's totally okay. The tighter the channel, the smaller the gains are going to be. And when it breaks out, we just readjust, okay? Trading on a downtrend like this can be done, but it is admittedly extremely difficult, which is why when you're trading like this, you want to use a DCA approach. And that's number 4 that I forgot to add, but it's okay because I'm kind of flying by the seat of my pants. Dungaree style. All right, so DCA is your friend. It is. Because going back to this parallel channel idea, right? If you go all in on something, 100% of your portfolio into a trade, for one, you're a dum-dum. Just telling you straight off the bat, you're stupid. That's a really bad idea. Especially because you don't know. You think this might be the main pullback and then it's going to shoot up. No, it's not. Just think it's crypto. 90 to 95% of the time things go down. So just assume everything is going to go down from your entry. So if you do not get your take profit target hit at $2, it doesn't hit it, but you have another order way down here just in case at 124. Well, guess what? You have your entry here. We have a DCA order at -22. So let's just make a little bit of we're going to do 2 trunks. So here's our order right here. And this is our DCA order. That's going to be orange. By doing this, I know we have lots of pretty colors. Just give me a second, okay? Here's our entry. Here's our DCA. So what happens is that our entry now gets averaged down to about here. So once we finally get pops, and look at this, in a 4-hour period, from here up, oh, come on, give it to me. There we go. 21%, 20%, 22%, 13%, Then finally 7%. You literally had, what is this? 2 days, 2.5 days to close in profit before it falls lower. The important thing to keep in mind when it comes to doing a trading like this, when you're trading in a downtrend, take profits early. It's okay. And understand that you might be trading it over and over and over. Again, this goes back to what I wrote up here. Trading is going to be work, but trading is also fun. Chop is for practice. DCA is your friend. If you can keep this in your back pocket and understand that this is going to be a rough year where we're going to see a lot of this, you're going to do just fine. You're going to be okay in next year's bear market, which I 100% believe is happening and it's going to happen. You can also use this same strategy and the same concept on an uptrend. Let's go back over here. So when charts start to finally go parabolic again, and you're not sure where to enter, and you keep getting spooked because the price keeps going up high, and you're like, oh crap, I don't know what to do. It just keeps going up and up and up and up. Now I need to invert this. How do I invert this? This is so annoying. Why did it do this? Maybe I have to do it the other way. Oh, I don't want to do it that way. I want to do it my way. So we're going to say from like here to here, and we'll do something like this. All right, so that's our range. That's pretty good, close enough. So we got our green for our entry. Obviously, we're going to be making way more on an uptrend. And when we're in an uptrend, by the way, it makes way more sense to keep just a little bit of every single trade in the coin itself, because if you're just trading this channel and it's going to go up from where you enter the first trade, up another 900%, and you're just taking profit in USDT, you're not making money. But if you're taking 10 or 15% out of every single trade and keeping it in Fartcoin, or better yet, breaking even with every single trade, well, all the Fartcoin that you've traded for this wonderful, glorious period of 2 weeks is now worth almost 10 times more. Get it? These are just a couple of strategies to help you out. Now, to be honest, I go into much more depth at our courses, The Better Traders, but I really didn't want to pitch the courses. I just wanted to talk to you about some trading strategies that are actually going to help you make money to protect your portfolio. And also, they're just going to make a lot of sense. Trading is only as hard as you make it to be. Investing is hard. Trading really doesn't have to be that hard. Trading really should be fun. And if you're not having fun right now, you should think about how you've been doing things over the last couple of months. Have you been following your trading plan? Do you have a trading plan? Do you have any experience trading markets like this? I do. So if you haven't subscribed yet already, I'm going to be dropping lots of tips and videos like this throughout this year, not only market updates and all that fun stuff, but seriously, I want to help you win, and you can win. You can be profitable in crypto, but you have to follow a trading strategy. Test this idea out. Let me know in the comment section what you think. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.